Happy New Year, everyone. It's 2022. I'm David Goldberg with United Trust Bank, and this is our market forecast for the real estate and housing markets for the upcoming year. First, let's look at a recap of last year. Interest rates were forecasted to rise at the beginning of the year and recover into the fall. They did actually rise pretty sharply through the beginning of the year as anticipated, and then recovered a little bit earlier, gaining back most of the losses by late summer. Housing forecast was strong demand and tight supply that would increase home prices, and the actual was exactly that, but actually greater increases to home value due to other factors like COVID, supply chain disruptions, and inflation. 2022. Well, the big factor here at play right now is the Federal Reserve and what they are doing currently, such as tapering, rate hikes, and balance sheet runoff. This can impact everything from the equity markets to interest rates, housing, even jobs. There's some new Fed members this year. They rotate each year, and fighting inflation is going to be one of the main focuses. And the current composition of the board is a little less accommodative than it was, say, last year. So that will definitely come into play. The Fed really should have hiked rates sooner. I believe they made the mistake of thinking inflation was transitory, and really it was much bigger than expected. Jerome Powell, the head of the Fed, basically during last year, inflation increased a significant amount from under 2% to 7%. Higher inflation caused interest rates to increase at the end of the year and are continuing to do so today. The Fed has begun their tapering of mortgage-backed securities, which will slow down the positive momentum that mortgage bonds had, which were driving down rates over the past 2 years. That's going to finish up around March. And then after that, the Fed will then begin hiking interest rates, the prime rate. And they're targeting right now 3 rate hikes during the current year, and then a few more into 2023. And we'll see where that brings us. Inflation and interest rates will still rise until the Fed acts. And if they can tame inflation, then mortgage rates would go back the other way. So we might see a reversal in the future here. The wild cards at play are, of course, COVID. That's been the story for the last 2 years. And then additional stimulus that the government implements could also impact things. And then finally, the runoff of the Fed's balance sheet, stopping the purchase of mortgage bonds and treasuries, the rate hikes, and so on. All of these factors are going to come into play in the housing market and real estate and mortgage rates. Stock market, looks like it's pretty overvalued at this point from a price to earnings ratio. So, the predictions from the experts say roughly a 10% decline in the major indices over this year. Well, what does that mean for mortgage rates? Mortgage rates are expected to increase towards the first part of the year into the upper 3s. And after we were in the 2s for a while, even telling people in the low 3s got hard. And then, you keep going up and up. So we should be at, closer to 4%, which historically is still very, very low. So it's nothing to be concerned about. And even if you're buying a home or looking to refinance, getting a rate that starts with the 3 is pretty darn good. Depending on the Fed actions, depending on the stock market, other economic conditions, interest rates are then forecasted to head lower towards the second half of the year, closer to the 3% range that we've been in for a while. So that's the forecast for interest rates. And based on that, with knowing that rates right now are maybe a little higher than they will be in the future, if you're purchasing a house, you might not want to pay too much in discount points. Avoid that extra upfront cost because you might be able to recover it by refinancing in, say, 6 months or a year, and then pulling getting that rate back down. So you don't want to sink too much into the loan up front to buy down the rate today when we know that might happen in the future. As far as housing goes, housing is going to also remain strong in 22, not quite as strong as 21. The forecasts show that home prices will still continue rising, but not as at a high of a rate. And demand might be a little bit softer as well as interest rates rise, but it still should be pretty strong considering rates are in the threes. Now, if rates went to 6%, obviously that's a whole different story. Um, the tight labor market, supply chain, these are all factors that are going to hurt the supply of homes coming to the market. And then the other side of it is rents. People that are still renting, they're seeing their rents go up every year, and that's going to continue to do so. The average rates have been rising above 5% a year, pushing some people to consider buying who have been renting for a long time. So that's the update on the housing, and that's basically it for 2022. So you have a great day, a great year. If you have any mortgage questions, don't hesitate reaching out anytime. I'm here to help.